Once again, thank you for joining us today in the afternoon. So my name is Balaram Vuchidi, Chartered Accountant, and we have companies like GetCompany, Spectrum Auditing, and SBC Tax Consulting. So we've been operating them from UAE, Dubai. We are based out in Dubai. So we provide services like value-added tax, corporate taxes, transfer pricing, audits, accounting, company incorporation, and PRO services. So in this session today, we are trying to cover the basics or basic concepts of the UAE legal framework as such with respect to the business. What kind of organization forms are there? What kind of authorities do we have? License issuing authorities, uh, and how many free zones do we have? What kind of free zones do we have? Because all these things are going to be important for any entrepreneur or any business owner to understand before starting the company. And at the same time, if someone is already existing and to know what is the expectation from the license issuing authority from that particular company if you already have a company here. So we'll quickly touch base on the what are the kind of compliances that you will have depending upon where you are located within UAE. So all these things which are relevant for any person to take decision on where to start and what kind of form you have to start will be important to understand. So that is what we are trying to cover in this session today. In addition to that, we are also trying to cover a bit on taxation. Of course, we will not be covering on the entire taxation, that is taxes that are available here. We will be touch basing upon only the corporate tax portion. That is also very limited to the businesses in free zones and some part of the mainland also. Plus, we'll touch base on few relevant or important points of taxation when you are a person who is resident in India or some other countries, and you are having a business here in UAE and running that business by being in your respective home country. So, what kind of tax implications will be there? So that also will be covering a bit, not fully, of course, because of the time constraint that we have. So this is what we will be covering in a nutshell. So this is what basically for anyone who wants to start the business here in UAE, he is expected to know as a primary this thing. In addition to this, if you have anything else, of course, you can drop in your questions in chat box. We'll try to address them and answer those questions at the end of the session. And plus, you can also reach out to us on our own website. We have contact details. At the end of the session, also, we'll be sharing our contact details to reach out to us. You can ask us any question if you have later on also. And you can reach out to us if you want us to provide any services that you want us from out of these services that we provide. So this is what we wanted to cover in a nutshell. I have along with me Vamshi, who is going to take us through about the legal forms and then different legal requirements that we have to set up a company in UAE. And we also have Rishabh Agarwal, who is going to cover on the taxation or tax areas. So this is what it is about. And with this, I would like to invite Vamshi to take the proceedings forward.
Thank you very much for the introduction. Myself, Vamshi Krishna. I'm with Spectrum for 5 years. I'm looking corporate services, taxation, and consulting. As you are aware, today's topic is UAE legal forms and the tax essentials. So quickly we jump into the session. So today we are going to discuss jurisdictions and the legal forms of the entity and who can hold 100% shareholding in the UAE entities and what are the other legal forms. Generally, we don't know about much. So those are going to cover today. As most of us know, there are 3 jurisdictions in UAE. One is mainland and free zone and offshore. So mainland and free zone will call it as onshore, and offshore will be on offshore. Mainland entities will be covered under Department of Economic Development, and free zone respective free zones authorities are regulated by the free zone authorities, and offshore entities are as well. In mainland, there are mainly 4 type of licenses. One is professional license, commercial license, industrial license, and tourism licenses. And in free zones, they have some limitations in the license types. Some free zones will give professional licenses and IT related licenses. Some free zones will give manufacturing licenses. Some free zones will give commercial licenses. But in mainland, we don't have any limitation in that. Yeah, mainlands are covered, are regulated by the Commercial Companies Law, which is issued by Federal Law number 2, 2015, and which was amended in 2020, and later it was amended in 2021. In previous amendment, there is a big relief for the foreigners, like given 100% ownership to the expats. Most of the activities, not completely, most of the activities they're given 100% shareholding. Before it was 51% shareholding by the locals and 49 by the other expats or foreigners who want to invest here. That means majority of the shareholding by Emiratis or locals only before. Now it was amended in 2020 by Federal Decree Law number 26, 2020, and most of the business activities can be owned by foreigners, 100%. So as we know, there are different legal forms in the companies. So in mainlands, mainly the sole establishments or civil companies, limited liabilities, partnerships, private shareholding companies, public shareholding companies, branch of foreign companies, branch of GCC, branch of free zones, and branch of mainlands. So we will discuss one by one in the coming slides. Who can own 100% shares in UAE companies? So as we know, UAE nationals can own 100% in all the types of legal entities like sole establishment, civil companies, limited liabilities, partnerships, private, public holdings, branches, as well as GCC nationals. Also, the most of the entities they can hold 100%, but expats have limitations. We can also hold 100%, as we discussed before, but there are some limitations. In sole establishment, yeah, we can hold 100%. In civil company also we can hold 100%, but we need to have a local agent in the company to make to open a civil or sole establishment company. So limited liability company, yeah, we don't have restriction of local agent. We can hold 100% without any limitations, but there are some restrictions in activity. So most of the activities we can hold, but there are few activities which we require local to get that activities. We will discuss the legal forms in detail in the coming slides. So most of the common business type in UAE is LLC, which is limited liability company. So in this company, yeah, we can hold 100%. We means here I am telling about foreigners or expats who is not locals. So expats can hold 100% shares in LLC company. Then we need to follow the rules under the LLC. So limited liability company, so most, as we know, the most common type. And ownership restrictions, we don't have any ownership restrictions. We can hold 100% without any limitations. Most of the activities, there are some activities we need a local for to get those activities. So at least one shareholder is required to set up a LLC company. So maximum shareholders we can keep in LLC is 50. So if you want to keep more than 50 shareholders, yeah, we have some other legal forms. We'll discuss later in coming slides. Shareholders' liability is limited to their shares. If it is partnership or sole establishment, and you have taken any loan from third party or any other company, and you are liable to pay the complete loan or liability to that, whether you have money in your company or not. So personally, you are liable to pay entire liability or loan. Here in LLC, I mean, your liability is limited to your share capital or your shares. And in mainland, there is no share capital requirement. With zero share capital also, you can open company. But there is only one limitation. If your share capital is less than 48,000, then while applying the visa, there is a difficulty to get investor visa. You can apply normal employment visa, but to get investor or partner visa, you should hold at least 48,000 share capital. The management, yeah, one manager is minimum, and you can keep up to 5 managers in LLC company. Next legal form is sole establishment. So after LLC, So most of the companies you can see in UAE is sole establishment entities. To form a sole establishment entity, you need a local agent. If you are a local or UAE citizen, yeah, you can open a company without any limitations, as we discussed before. But as a foreigner, as an expat, if you want to open a sole establishment, you can hold 100% shares, but I mean 100% ownership, but you need to have a local agent to open a sole establishment in UAE. There are some other limitations also to open a sole establishment. So for UAE and GCC nationals, they can open any kind of activity without any limitations. But for foreigners, there are some limitations to I mean, while selecting the activities. For example, if you want to set up a legal firm, if you want to set up a audit firm, so it can be, I mean, it can be opened by local person only. Being an expat, you cannot, I mean, you are not allowed to open a sole establishment for those kind of activities like professional activities, I said, audit firm or a law firm. So those kind of limitations are there. Otherwise, yeah, we can open 100% as a owner by keeping a local agent. Next legal form is civil company. So what is civil company? In general, if you can say, in other countries, you may know about the partnership forms, right? So the same kind of structure it is. Sorry, it's not limited liability form. It's like a partnership firm. It's mainly focused on professionals like doctors, accounting firms, or marketing. They can have a partnership and they can open a civil company with unlimited liability. We can say it's not limited liability. So you are the responsible for your acts in this company. To open a civil company, again, we need local service agent. There are limitations. So as we discussed before, yeah, some activities which is allowed to locals only. So to do those activities, definitely we need to have a local person in the civil company. So what local agent will do in it is just for representing our company in government authorities and other authorities if required. So in management point of view, he doesn't have any powers to do that, but just he's a representative as per the law. Next legal form type is private shareholding company. So generally if you see in India, we have private limited company. Likewise in UAE, there is private shareholding company. To open private shareholding company, we need at least 3 shareholders. But in case of LLC, with one person, we can open limited liability company. Here in private shareholding company, to open it, at least we need 3 shareholders. Majority of the shareholders and directors should be UAE nationals. And we cannot, it's not publicly open to purchase the shares like public shareholding company. It is a private shareholding company. So if you want more than 50 shareholders, yeah, you can have it here. And initial investment to open private shareholding company is 2 million. Where it in LLC, sole establishment, and a civil company, we don't have any requirement. But to open a private shareholding company, yeah, we need minimum 2 million. Next legal form of the company is public shareholding company. We'll call it as PJSC, Public Joint Stock Company. If you see all the banks and financial companies and insurance companies, multinational companies will be formed under this legal form. To open this company, minimum shareholders requirement is 10, and we need at least 3 directors in the board, 3 to 15, and the majority shareholders and directors in this legal form should be locals, UAE nationals. So chairman and majority board of directors must be UAE nationals. We can issue shares to the public. There is no limit restriction, and the minimum share capital requirement is 10 million. And if you want to open a bank and financial institutions, the minimum share capital requirement will vary. It is 25 million, 30 million, like that. It will be depends upon the entity you want to set up. As of now, we have discussed most of the legal forms in mainland. When it comes to free zone, yeah, we have different forms in free zone also. Here in UAE, we have more than 50 free zones, maybe 60, more than 60 free zones. If you see in Dubai, we have more than 40 free zones here itself. And free zones are actually separated between their activities. For example, if you see the Zabza Jebel Ali free zone, it is mainly shipping related or uh, logistics related free zone. Yeah, if you can open trading activity license also there, but there are some limitations to that license. And if you see if the authority, it is not a it's mainly focused on IT and other professional related services. So if you want to set up a IT related company, IPSA DSO is the suitable option for you. Likewise, there are different reasons in UAE. So while setting up a company, we need to choose which kind of, I mean, we need to go for mainland or free zone. If you want to go for free zone, so which free zone is suitable for you, and where you are getting more benefits, you can compare and you can go with the free zone. And what are the benefits while setting up the company in free zones when it compares to mainland? The major thing is, yeah, we can say that the setting up cost is lesser when it compares to mainland in some free zones, not all the free zones. If it is designated free zones, yeah, definitely the license cost will be more, and you need to take a facility, office, a warehouse. It depends upon your requirement. And if it is normal free zone, which is not fenced, it's a normal free zone like Ibza, Maidan, or Shams. There are some free zones. Yeah, there you will get less costly compared to other free zones. So, what are the free zone legal forms? In free zone also we have limited liability, LLC, and establishment and Freezone Company, and branch of foreign company, branch of local company. These kind of legal forms we have. So most popular legal form is free zone establishment. Even though it is establishment, most of the free zone establishments are limited liability companies. To know whether it is limited liability company or sole establishment, like unlimited liability company, so we can see our incorporation documents. It will be clearly mentioned whether it is limited liability or not. By seeing FZD, it is not uh, unlimited liability company. So it will be known after verifying the incorporation documents. Even Freezone Company also, most of the Freezone Company FZC are limited liabilities. Freezone LLC, anyways, it is limited liability companies. Branch of foreign company. Yeah, you have a company in other country and you want to open a branch here. Yeah, that that can also be done. You can open foreign branch here in free zone, and they have some limitations actually in foreign branch. So what you want to open, it's a branch as a subsidiary, or you want to open a representative office. That will discuss little later in detail. This is one of the jurisdictions, offshore company. Offshore company will be treated as entity which is established outside UAE, which is not covered under UAE mainland jurisdiction, UAE mainland commercial company. It's not covered under commercial company law. And what are the benefits you are going to get if you open an offshore company? Yeah, definitely it's outside UAE entity. The tax burden will be less, and you will not going to do any business mainly in UAE. It is just to protect your assets, privacy and confidentiality. And without coming here, you can set up a offshore entity, and yeah, you'll get privacy mainly, and you have flexibility to operate from offshore entity to other entities. Yeah, Jebel Ali Free Zone and DAFC, Russell Khaimah, and Asman Free Zones are giving the offshore licenses. So not all the free zones are authorized to issue offshore entities. There are 4 or 5 free zones. They are issuing the offshore entities. Yeah, as we discussed just now, branch or representative office. What is the difference between branch or representative office? So branch of a foreign company or UAE company, they can do the commercial activities relating to the holding company or main company head office. But representative office, they can promote their business. They are not allowed to do the commercial activities in UAE. they can do, I mean, they can do the research, they can do the marketing, they can promote their business, and they can bring the business and give it to the main company, but they are not allowed to do the business in representative office. In branch, yeah, you can do the commercial activities also. Family office, this is one of the nowadays it's one of the best legal form in Dubai. So what we'll do with family office? Family office is a private wealth management advisory firm. That firm will give you taxation and wealth management planning, and it will give you financial planning services that and legal and other consultation they will give. So in UAE, family offices are becoming more popular, as we discussed just now. So our HNIs are ultra high net worth families, and the region continues to grow. These families offices in can be their single family offices or multi-family offices. So what are the uh, pros and cons in family offices? Yeah, as just we discussed, it's a customized service to improve the wealth of the family and increasing the control and privacy of the family, and give the legal and tax optimization to the family, taxation and other benefits to the family. Yeah. Anyways, yeah, it's costly to set up a company, and yeah, lack of transparency, potential conflicts of interest will be there. Yeah, we discussed mainland, free zone, and offshore, and their legal types as of now. So, what are the differences? Main differences in free zone, mainland, and offshore entities? Yeah, free zone. As we discussed now, yeah, free zone can hold 100% without any limitations. In mainland also, yeah, we can hold 100%, but there are some limitation in few activities. In offshore, yeah, expat can hold 100%. And if you see in free zone, VAT is applicable, but in designated free zones, yeah, it's not applicable if you do business in the designated free zone and outside the designated free zone. In mainland, VAT and corporate taxes are applicable. In offshore, VAT is not applicable. Corporate tax might be applicable. And access to UAE markets. If you are a free zone entity, you have limitations to do business in mainland entity. You can do business in free zone without any limitation, without any restriction. But if you want to do business with mainland, yeah, definitely there are some restrictions, because the free zones are expected to do business in that free zone only or outside UAE. In mainland, we don't have any restrictions. You can access all over UAE and outside UAE also. In offshores, yeah, they are not allowed to do any commercial activity in UAE, but they can do outside. As of now, we discussed legal forms of the companies and jurisdictions and license types. So just to recap, so what are the legal jurisdictions in UAE? So mainland, free zone, and offshore. Regulating authority of mainland is Department of Economic Development in Dubai. Likewise, in all the Emirates, we have separate departments, and the mainland entities will be covered under Commercial Company Law, Decree number 32, 2022. Yeah, here we can get a doubt, and this Commercial Company Law will be applicable to free zones also. Generally, no. If that free zone authority specifically say that will be covered, I mean, these companies are will be covered under commercial companies, then it will be covered. Otherwise, free zone in each free zone entity, they may have their own rules and regulations by that free zone authority. Now, Mr. Rishabh will discuss about corporate tax.
Thank you, Vamshi. So now I think now every one of you know how to or you know which form of legal business you wish to incorporate in the UAE. And now once you know that, you should also be aware about the compliances, especially on the corporate tax front. And if you see the screen as of now, what is one common thing we all can see in all the three major business types, or commercial areas, either free zone, mainland, or offshore, is that corporate tax is applicable, be it free zone company, be it a mainland entity or a offshore entity. So that this is something they all share in common. So that is why it is pertinent that we know at least, the basics, because earlier when the businesses started in UAE and the boom of UAE, uh, we always thought that there is no tax in UAE, but now I think there has been enough buzz about having corporate tax in UAE, though at a mere 9%. And staying in the region, we still felt that this has not discouraged people to come and do business in the UAE or from the UAE, and cater across the globe, cater all the markets across the globe. So UAE still remains a very attractive business hub in terms of any of the industries that you look at majorly. So we need not worry about with the implementation or introduction of corporate tax that UAE is not an attractive destination. But I must say that I really believe that UAE has become even more attractive with corporate tax, because now whatever transactions you will be doing through your UAE company would at least be considered as tax compliant. They would not be looked in with a magnifying glass. So this introduction of corporate tax has not only increased the UAE's strength and position across, with its peers, that is its other jurisdictions, but has also made it a more robust and a more acceptable jurisdictions for countries to do business with. So what I will do today is just to take you through, a little bit on the basics of the corporate tax, which will actually be useful for a lot of people doing businesses in the UAE or looking forward to establish businesses in the UAE. Considering, of course, the paucity of time, we will take in things in brief. And now UAE corporate tax has been developed extraneously, and we have a lot of guides, decisions, provisions that we need to read in order to, even give a solution to any of the clients. So we see that there are a lot of entrepreneurs among our participants, and it's a mix of audience. So I'll just quickly go on to the basics. As we saw in the previous slide, it's very clear that UAE corporate tax is applicable to everyone. There is no exemption, uh, by far no exemption at a large scale to any commercial business happening. We'll see people who are exempt from UAE corporate tax or are not covered by the law at all. I've just enumerated over here a little bit on extractive and non-extractive businesses or government entities. So these are not covered under the UAE corporate tax, and the reasons of it's very understood and self-explanatory that government companies are usually more into providing the utilities and the infrastructure and the welfare as compared to a commercial business. So this is one of the reasons that UAE corporate tax does not cover government or government entities. However, wherever they are doing a commercial business, they are still covered. Coming on to the basic things that we look at, that what is the rate of UAE corporate tax. So the headline rate or the flat rate of tax is at 9%. However, they have given us a basic exemption that any income up till 375,000 dirhams, net income, when I say net income or taxable income, it is my revenue less the expenses. So the net taxable income, anything up till 375,000 dirhams will be taxed at 0%, and anything beyond 375,000 dirhams will be taxed at 9%. So it's a slab. So quickly taking one example. So if your net taxable income is 400,000 dirhams, so for the first 375, zero. For the next 25,000, taxed at 9%. So this is how it works. 9% being one of the lowest tax rates across the globe. I don't think any other country apart from Hungary has a federal tax rate that is lower than 9%. Recently, of course, another one of our peer GCC nation has introduced a draft law, so we'll not get into that. So until today, in terms of effective rates, there is no other country with a federal tax rate below 9%. And that comes with an advantage of the infrastructure of UAE and not just any other country. Coming on to a little bit on withholding tax. So withholding tax is for payments being made from UAE either to another UAE person or from UAE to any other jurisdiction. So as of now, the withholding tax, or the Indians would relate as TDS, tax deducted at source, so is at 0%. So the regime is there, the transactions are there, but the rate is at 0%. So we do expect it to increase, but when, no one knows. So this is a brief, very brief overview on what is the rate and how the tax is applied. It's applied to everyone doing business activity. So we'll see who are taxable persons as we move forward. So I'll just jump on. Um, so two tax rates, 0%, 9%, 0% up to 375,000 dirhams of taxable income, and 9% beyond that. For free zone companies, of course, we do have a special regime. There are six conditions that you need to qualify in order to get a 0% tax rate, and not all the activities are covered. So there could be a possibility that you have a free zone company, but your activity that you do as a business or a commercial activity is not a qualifying activity. So FTA, or for that matter, Ministry of Finance, has restricted the scope of activities that could have been covered under the 0% tax rate. Yeah. Going on, who is the taxable person? Because that's where we start. Who is the taxable person? What is the tax rate? And what income is to be taxed? Or basically, what is taxable person? Taxable income. So we have seen what is the tax rate. It's 9%, right? So next part over here would be to know who is a taxable person. So here there are two basic categories. Either a taxable person can be a resident or a non-resident. Whenever we talk about residents in terms of companies or juridical persons, as in entities which have a separate identity, separate legal identity, or separate legal entity approach is followed. So for those entities, or for those taxable persons, so if you are incorporated in UAE, then you are a taxable person, you're a resident taxable person. So all the company types that Vamshi discussed in today's session, be it a mainland entity, be it a free zone entity, be it a offshore company, all of them are incorporated or registered within the UAE. So they become a resident taxable person. When we come on to natural persons, so I am a natural person. If I'm doing a business or business activity, I would be considered as a taxable person. So where there has been a very long debate about what is a business or business activity, and cabinet came out with a cabinet decision on that, that certain incomes like wages, salaries, income from investments and real estate will not be considered as income from business or business activity. And if you are doing business in your own name as a natural person, for example, I am a chartered accountant. I do not open a firm or an LLC over here, and I take a professional license in my own name. I and start doing consulting, either tax consulting or management consulting. I start doing that in my own name. Even though I'm not a incorporated entity, I'm not a separate legal entity, I would still be considered as a taxable person because I am doing a business or business activity. Coming on to the non-residents, yes, non-residents can also be taxable persons. And what we should really be concerned about is the first two boxes that you see, that is, has a permanent establishment or has nexus in the UAE. Because permanent establishment has a very long definition on how you can become a permanent establishment. I would give a very small example, which again, Vamshi covered above in one of the forms of incorporation as branch of a foreign company. So if there is a foreign company, let's say there is a UK company having a branch over here in the free zone, will it be considered as a taxable person? The answer to that is yes. The branch of a foreign company is a permanent establishment of the foreign company, will be considered here as a taxable person, and it has to pay tax on its global income in terms of the income related to the permanent establishment. Coming on to Nexus, Nexus is basically your relationship, nothing else. So if a non-resident has Nexus or relationship in the UAE, then they are a taxable person. Again, the question comes that what is Nexus? So in terms of Nexus, again, the ministry has defined it as a foreign juridical person holding immovable property in the UAE. So if you have followed a model wherein you wanted to invest in UAE real estate, and you have used your company abroad. So let's say a company established in India has bought real estate or has bought any immovable property in UAE, that creates nexus. So over there, if you have any income from that immovable property, you have to pay, register in UAE, pay taxes, do compliances and everything because you are a taxable person. So these are the two main things which people looking forward to establish in the UAE or looking forward to do business in the UAE should be really concerned about. That okay, even if you not incorporate a proper company, there is a possibility that if you do business in the UAE or from the UAE, there's a possibility that UAE can claim taxing rights over your income. So I always say that we consultants are a very, very smart creatures and we always find out a way. That's why this is just a warning, or that whatever you do, let's not be very creative about making complex structures and trying to even avoid this 9% tax, but be supportive of getting an infrastructure like UAE with just at a 9% cost. So, and of course, you have your free zone regime to mitigate that as well. And of course, your net income will be taxed. And there are various numerous exemptions that help you out to reduce your effective tax rate that will not, might even not touch to a complete 9%. So moving forward, now we know about who is a taxable person. Now we also know about what is the tax rate. So what is the third thing left? The third thing left is what is your taxable income, or what, at what income now you have to pay this 9% tax. So talking about, again, we start from residents. So for a resident, again, a juridical person. So when I say juridical person, again, it means all the separate legal entities that have been incorporated in the UAE. So their worldwide income is taxed, because we often receive this question that, Rishabh, I have a company in UAE free zone, but all my customers are outside UAE. I do not even do business in UAE. What should I do? Do I need to pay tax? The answer to this that is yes, you need to pay tax irrespective where your source of income is. If you are a UAE tax resident and you are earning income, irrespective from which source, where is it? If it's in India, it's in UK, even if it is in Antarctica, it really doesn't matter. Your worldwide income is taxed, right? So your global income is taxed wherever you earn it from. There is no barrier to it. There is no restriction to it. Talking about natural persons, we have seen that only natural person becomes a taxable person if and only if it does a business or business activity. So income from that business or business activity is taxed in hands of natural persons in the UAE. Talking about the second leg that you see on the screen about non-resident taxable persons. And as I said, that we should be concerned about permanent establishment and we should be concerned about nexus. So again, if we have a permanent establishment in UAE, and in our example, a branch, foreign company, we have that in UAE. The branch has to pay taxes on its operations, on whatever revenues, net revenues it earns after deducting all the expenses, of course, business expenses, and then you pay a net 9% tax on that in the UAE. Coming on to the nexus, again, these, as I said, it is for foreign juridical persons having income from movable property, and they have to include it as their income and show it, and of course, pay 9% tax and do all the compliances. You must be thinking I have not talked about state sourced income. So state sourced income is the concept, and I'm connecting you back to the first slide that I showed on withholding taxes. So state source income is basically nothing but any income that you're getting from a UAE resident. So for example, I sell, let's say, watches. Okay. I had a customer, someone who contacted me on Instagram that, Rishabh, I need so and so watch that you are selling. I sold him. Right now, I am getting payment from that customer who is a UAE resident. For me, that is a state sourced income. Now, the question comes in that how should the UAE FTA tax me? I'm not a resident in UAE. I'm not even in UAE. I'm sitting somewhere, probably in Barbados, selling these watches. So how to tax that? So to tax those incomes, UAE already has a mechanism for withholding taxes wherein the payer is supposed to deduct tax and then pay. However, luckily we have this tax rate at 0%. So with this background of knowing what is the tax rate, what is the tax base, and who is a taxable person, I will quickly touch upon certain things on partnership firms, family foundations, and investment funds. Vamshi has duly covered them from a legal perspective. I'll just quickly cover them from a corporate tax perspective. Again, I just have the next 10 minutes to cover these things. So for partnership firms, as per Article 16, by default, they can be of two categories, either an incorporated partnership or an unincorporated partnership. When we talk about incorporated partnership, so once a partnership is incorporated, it has a license, it is registered in the UAE, is a resident taxable person in its own name, a separate legal entity approach will be followed. Talking about unincorporated partnerships are fiscally transparent entities, and I have taken a very heavy word at this moment, in the day, fiscally transparent. When I say fiscally transparent, it essentially means that these partnerships are not taxed as a separate legal entity. Here, the partners are directly taxed, so the income will flow through. It's a pass-through entity. Talking about again trust and family foundations. So it really depends how you have set up a trust or a family foundation, and they are of course liable to corporate tax. But again, this pass-through approach is followed, wherein the trustees, beneficiaries, or the settlers, they have an option to be taxed directly and not the trust or the family foundation. Coming on to investment funds again also have both the options to be taxed as a transparent or a opaque entity, that is, be taxed in their own name or be taxed in the investor's name. So, of course, these are very simple things that I've put here, but there are multiple layers of conditions beneath them that you need to qualify or you need to satisfy in order to opt for either of the options. Coming on to the last thing that I have is on qualifying free zone. So I said, if you are a free zone person, that is, you are incorporated in any of the free zones across the UAE, any of the free zones for now across the UAE, you can take a 0% tax rate. You can opt for it. However, you need to satisfy these six conditions. These six conditions again are very intricate and very detailed. So I will just, brief about these six, all six of them. So considering the first one, the adequate substance. So substance essentially they've defined as that you need to have adequate full-time employees, you need to have adequate assets, operating expenditure, you need to do your income generating, a core income generating activity from the free zone itself. So they are willing to give that 0% tax rate, but they are not willing to give that 0% tax rate to only paper companies. So if and only if you have substance in the UAE, and substance is very, very subjective. I can be doing 100 crores, but my business does not require people. It is not at all labor intensive. It is a capital intensive business wherein I need to put money. For example, trading, or for example, stock trading, or maybe software development, wherein, okay, two developers are enough. They will develop, they will code, everything is fine, no problem. But you should have people here. So especially for people who are looking to opening an entity in the UAE in a free zone with an objective of getting a 0% tax rate. So I would urge them that they should create substance in the UAE. It's not very difficult to comply with substance, but of course it should be real. It should not be just on paper. So only benefit that will be available for 0% will only be available for companies which have substance. Second condition is derives qualifying income. Qualifying income has been defined again like two, three things that are included. Major one is that you are doing a qualifying activity. So when you look at, there is a list of, I think, 14 or 15 qualifying activities, which includes things like distribution, manufacturing, processing. Then they have things like treasury and financing for related parties. Then they have things like headquarter services for related parties, fund management. So all of these things or all of these services or industries are covered under the definition of qualifying activities. So if you are doing any of those activities, you have a very high chance of getting a 0% tax rate, of course, subject to other conditions that we are looking at, because all of these have to be satisfied, not any of them, all of them, right? The third one is that you do not voluntarily opt for a 9% tax rate. So it has been made, this condition has been put just to plug in one of the loopholes in the law, the way it is worded. So it really has nothing, to do an analysis for. Fourth one is really important, that you comply with transfer pricing. So if you have related party transaction, connected person payments, you need to comply with transfer pricing. You need to make sure that you transact with all the related parties and connected persons at arm's length. There is a complete process of benchmarking exercise that you need in order to show or prove to the FTA that yes, you have transacted at arm's length. And I will discuss a real life situation on this transfer pricing aspect as well once we finish the free zone process. Fifth condition here is to prepare and maintain audited financial statements. Most of the free zones always ask for audited financial statements when it comes to license renewal, but wherever you want to take a 0% tax rate, make sure you have audited financial statements. And the last condition is on de minimis criteria. So de minimis criteria really talks about that, okay, if you have little bit of, income from non-qualifying activity or other incomes which are not qualifying, we will allow you, no problem. We will not, just because of one transaction, we will not take away a 0% tax rate. Because once you fail these conditions, you cannot take 0% tax rate for that financial year and also for the next 4 financial years. So it's like a 5-year long-term program that now you're taxed at 9%. So 5% criteria has been given, or 5 million, whichever is lower. So if your non-qualifying income is up till 5 million or 5% of your total turnover, whichever is lower, then you satisfy the de minimis criteria. If it crosses that threshold, then I'm sorry that you cannot take a 0% tax rate. Also, in the next 5 minutes, I would like to cover or touch upon certain situations or certain requests that we got when we organized this webinar, was especially from the Indian investors, that what are the things that we need to look at, when we are looking to establish a company or establish a company, make a company or start a business in the UAE from India. So these are the four major things that come into my mind when someone asks me that question from a compliance perspective. And what I was talking about transfer pricing in the third condition over here for a qualifying free zone person is the first thing that comes into my mind, especially for entities which have a manufacturing facility in India and wish to set up a global distribution hub in the UAE. Because what will happen, you will transfer your goods from India as a manufacturer to the distributor in UAE, which will further distribute across the globe. So now when it comes to it, usually the entrepreneurs will ask, okay, India, I have a tax rate of about 25%, UAE 9%. Let me do that. Okay, I manufacture my goods for 100 rupees. I will sell it at 100. I'll not book any profit in India. I'll sell it at 100 to my related party, that is the distributor in UAE. The distributor will finally sell it to my customer at 160. So 60 rupees profit, everything is booked in the UAE. We'll pay 9% tax, no problem. But when it comes to it, transfer pricing, it says, no, you have to keep some margin, which the industry is keeping in India. So all the manufacturing units who wish to set up a global distribution hub in the UAE or already following this model should be careful on that from an India and of course both UAE perspective. Uh, one thing also comes into the mind of the entrepreneurs or the businessman is that UAE has a small business relief regime, which says that up till 3 million dirham turnover, we'll not charge you tax, no problem. So 3 million turnover is a very big amount when you convert it into Indian rupees. So when that's the case, people want to shift most of the turnovers here, especially from a service industry. Then again, things like general anti-avoidance rules and things like I would say transfer pricing come into picture. So we need to be careful that we comply with the law and we do all the planning that is possible, but of course in the four boundaries or four corners of the law. Second question, usually people ask that, okay, I've earned money in UAE now, my money is parked in the company. What now? I need money back in India. We have to do repatriation. We have to do things wherein we can take my money back. And now, because I don't want to come here and stay, I just opened a company in the UAE just to, park the money for the while. But, sadly, the way you repatriate either dividends, interest, service fee, or whatever, will be taxed back in India because you're an Indian resident staying in India. So those things will get taxed. So, you have to have a long-term plan when you start the business today. have a long-term plan. Of course, if you do not wish to shift to UAE in substance and just use this UAE entity to do business globally, and finally you wish to have all your money back in India or wherever you stay, so make sure at the day of incorporation you have that repatriation plan, because when you would need money back, it would be very difficult to optimize it from a tax point of view. Third thing or third question comes into the picture is that people say that I am a resident in India, I sit in India, I visit only UAE once a year, I have a company. Can India tax my UAE company in India? So, of course, there is a concept of place of effective management that is also there in India and in UAE both. India can tax your UAE entity if it is effectively being managed from India, so there is a possibility. However, the CBDT has released a circular which says that if the turnover of the foreign company is not exceeding 50 crore rupees, INR 50 crore, this condition we will not apply. No problem. We don't want to catch small fish. We only want to catch big fish. So up till 50 crores, if you're sitting in India, relaxing, probably in Goa or on a beach, and or if you like mountains, you can go in the mountains as well, and your company is in UAE, in being effectively managed from India, India will not claim taxing rights on the income of the company in UAE up till 50 crores of turnover. So every year you need to assess your turnover and then decide whether there is a inherent risk or not. With this, I think, Vamshi, my time, I have not exceeded my time, but my time ends. And I hope I could give in a little bit hint on what look the UAE compliance scenario looks like, and how we should go about the incorporation process, but in a very compliant manner. Um, just one more thing I'll take, on compliances is about FEMA. So if you are investing in any of the companies abroad or you're opening up any of the companies abroad, you need to do a compliances for FEMA in India. A lot of investors miss to do that, and there are huge penalties for that in India. So make sure whenever you are incorporating any entity abroad, not just UAE, anywhere across the globe, apart from India, you should do the foreign exchange compliances under the FEMA. It's not a very heavy compliance. It's fairly simple one, but that needs to be done. And then you need to file an annual performance report, an APR report, every year once your financial year is closed, so that the Indian government knows how your foreign company is performing or your foreign shareholders are performing. In order to conclude, the overall message of the session today was to also show that with all of the compliances that UAE is bringing in, it is just getting more robust in terms of its image, in terms of an attractive destination. And even today, a lot of businesses are shifting to UAE or moving to UAE for various reasons, of course. But we should not be discouraged with such compliances. These compliances are for our betterment, and let's be compliant and run our UAE businesses. That's all. Vamshi, over to you for the concluding remarks.
Thank you, everyone. Thanks for joining us.